All right, so what if I told you that there's an investment opportunity that had a very volatile past, but maybe huge upside potential? Let me walk you through it. Well, it's down today about 2%, but in the past year it was up 158%. In the past 5 years, up 1,043%. All time it's up 39,000%. Would you be interested? Would you chase this? Joining me now, Bianco Research President Jim Bianco. And Jim, of course, I'm talking about the mercurial ride of Bitcoin, which is now awaiting potentially a whole assortment of approvals for spot ETFs. What do you think? I mean, where is because this obviously there's some front running ahead of this news, but many think between this and the so-called halving process that's coming up, this is the time to jump on board.
Yeah, a lot of people have, but markets tend to be forward-looking. We're all expecting maybe this afternoon, but through the first part of next week, as many as 14 Bitcoin ETFs will be approved to be trading in the United States. And that will open up Bitcoin and cryptocurrencies in general to a larger audience of mainly wealth managers and people that use more traditional accounts. But what I'm worried about is that's already occurred. That's why the price was up 158% last year. That's why we've seen tremendous volatility and tremendous volume in anticipation of this event that's coming. And it might wind up being one of those classic buy the rumor, sell the news types of situations.
Let me shift gears here to the jobs market today. We had the jobs report. I think the ISM service number might have been a bigger shocker, to be quite honest with you. And of course, this week, net, it feels like the data was on the negative side. I think this is what the Fed wanted to see. How do you sum it all up?
I agree with you that the ISM services number was a bit of a shocker, especially after the manufacturing report that came out 2 days earlier was much stronger, and that the payroll report was much stronger than people expected. I think if you put it all into the mix, what you've got is you've got an economy that looks okay. It looks like it's growing, as economists would call it, a trend growth. It's not slowing down. It's not really showing some signs of weakness. Oh, there's pockets here and there, but there always is. And if the economy is growing okay, my concern has always been that's going to lead to demand, and that's going to keep inflation sticky. And if it keeps inflation sticky, that's going to put upward pressure on interest rates as we progress into 2024.
Someone put a trade on yesterday, options trade, 600,000 for the 10-year to pop to 4.15 today and make 10 million. Was that you?
No, it wasn't me. And I'm glad it wasn't me because it went the other direction too. But that's kind of the way that Wall Street works with a lot of these options trades.
Yeah. No, I was just kind of busting your chops because you were looking for 5 to 5.5 on the 10-year. Is that still a target?
It is still a target. I still think that we are looking for that sometime in 2024. In other words, make a new high. It sounds like a lot, but I'll remind people that a week ago, the 10-year yield was at 378, and it's already traded 405 today. So it's already moved 30 basis points in a week, and it kind of does that a lot. So it's a very volatile instrument right now. And if you think about that kind of volatility within the next 51 weeks or so, I don't think it sounds as outlandish as it may at first blush.
We had Michelle Girard on earlier, just before you, and she's sticking to her recession gun. You're sticking to your 5.5%. I love when brilliant people aren't swayed by the crowds, and often that's why I like you coming on the show and sharing your thoughts with us. Thanks a lot, Jim. Happy New Year, my friend.
Thank you. Go Michigan. Go Blue.
Yes, let's do that. All right, folks, my next guest, he's a silver